And we begin the program with Senator Mark Warner, a member of the Senate Banking Committee, among other assignments. Senator, thank you for being with us.
Thanks for having me, Al.
There's a growing perception that much of the steam momentum for financial regulation is fading, that the Senate's not going to do anything this year, and Wall Street's getting back to business as usual.
You know, one, I think if that happened, it would be a travesty. I mean, if we didn't learn the lessons of the worst financial meltdown in all of our lifetimes and try to put new rules of the road in place, I think it would be a disaster. It would be irresponsible. I don't actually share that view that the steam has run out. I think you're going to see a bill develop on the Senate side over the month of October. I think it'll probably be brought out and marked up at some point during November. And this is one of those areas.
So you can finish.
I think it can. I think it can be finished. It may go on a little bit, but this is an area where, you know, it shouldn't be ideological. It shouldn't be partisan. But gosh knows we got to get it right, because the unintended consequences could be dramatic.
Will it include a systemic regulator for systemic risk, and it will be a council as you have proposed?
Listen, I have proposed from day one that it ought to be a council, there ought to be an independent chair. It, of course, ought to include the Fed, the Treasury Secretary, all the prudential regulators.
Do you think the committee will go along with that?
I think there is a real sense, again, bipartisan sense, that the council approach will be the right way.
And how about a single bank regulator, which Chairman Dodd and you and others have talked about? Do you think that'll be in the Banking Committee bill?
Well, I think everybody would agree from at least an intellectual basis that, you know, the regulatory arbitrage that we have going on right now, where a bank can choose which regulator will do the least to them, is not a good system. And I think a number of us will start with the idea of let's have a single end-to-end regulator for banking institutions. I do think there are concerns that community banks have raised about how we'd make sure that if you had a single regulator, they wouldn't be kind of the stepchild. But this is, again, one of those areas where, you know, we ought to check our partisan hats and at the end of the day make sure we get it right.
And executive compensation, lots of talks about limits and caps on Wall Street. Do you think the Banking Committee will go further than the Obama administration's proposed?
I think, you know, listen, I can only speak for myself. Right. This is somebody who spent 20 years in the finance markets before I got into politics. I think it's really hard to set an arbitrary cap. I think that the private sector will always find a way around that. I think I do think the idea of how do we tie long-term compensation to the long-term success of the institution, so that everything is not so quickly done on kind of a only quarterly basis and then reward on those. And if too much risk was taken and they end up seeing the institution go down, some notion of a clawback makes a lot of sense.
You said in a statement recently that it was very important for these banks to set the right standards, was the term that you used. Goldman Sachs has recorded record profits, and by